Hey everyone, and welcome back. We're diving into the wild world of electric vehicles in China today, because let's face it, you can't scroll for 5 seconds without seeing a headline about it, right? NIO raking in cash, Tesla making big moves, and a whole lot of speculation about where it's all heading.
Yeah, it's a bit of a roller coaster over there, that's for sure.
Exactly. So we're going to break down what's really going on, try to cut through the hype, and figure out what it all means.
It's a fascinating case study, really. You've got individual companies making waves against this backdrop of, well, China's economic policies, not to mention the global race for, EV dominance.
Right, like a whole chess game happening on multiple levels. And speaking of making waves, let's talk about NIO for a sec. Their stock in Hong Kong just shot up like, what, 17% practically overnight?
17%, yeah, it was pretty wild.
Yeah.
And the reason? A fresh cash infusion, $470 million in funding.
Okay, so a cool $500 million, just like that. Why is that such a big deal?
It's huge, especially for a company like NIO that's, let's be honest, not yet profitable. The thing is, building electric cars is so capital intensive. These startups burn through cash like crazy to cover research, development, manufacturing, you name it. Analysts are estimating that NIO is going to go through almost $3 billion just next year alone, just to keep the lights on.
$3 billion? Man, that's a lot of pressure to start turning a profit. So this funding isn't just about keeping NIO afloat, is it?
Definitely not. It's got to be seen as a huge vote of confidence from investors. Plus, there's this buzz building around improving order trends for NIO.
Like, people are actually putting their money where their mouth is and buying these cars.
Exactly. And some analysts, Citigroup for one, they even bumped up their target price for the stock, right? This suggests that maybe, just maybe, NIO is turning a corner. And that could be a good sign for the broader Chinese EV market, too.
Okay, so that's a glimmer of hope for anyone who's been watching the EV market with, let's be real, a little bit of anxiety lately. But then there's the bigger picture in China itself, right? The government's been stepping in with some pretty heavy-handed economic policies lately.
Totally. We're talking lower mortgage rates, interest rate cuts for banks, the whole 9 yards. It's all about stimulating the economy, getting people spending again.
So the idea is that if consumers feel more confident, they'll be more likely to splurge on a shiny new EV.
That's the hope, anyway. But it's not just EV makers seeing a potential boost. Even those e-commerce giants, Alibaba, JD.com, they're riding the stock market wave, too.
Interesting. So what do online shopping sprees have to do with electric cars?
It's all about the bigger picture. These companies are kind of like the canaries in the coal mine for the Chinese economy. If they're doing well, it suggests that, broadly speaking, consumer spending is up.
Okay, so their success is like a potential leading indicator for the rest of the market, including EVs.
Exactly. But, and I think this is where things get really interesting for our listeners, some analysts are saying this stock market surge might be a bit, well, artificial.
Artificial, how so?
The thinking is that some of this is driven by traders trying to get ahead of the game before the upcoming national holiday in China. They want to lock in their positions before things potentially shift.
So it's like a pre-holiday buying frenzy, but on the stock market.
Precisely. It highlights how market movements aren't always driven by just, company fundamentals. There are these other factors at play that can really muddy the waters.
So we got government intervention, potential consumer confidence, and holiday speculation all swirling around in the mix.
It's a lot to keep track of, that's for sure.
It's a lot like trying to predict the weather, right? Like you've got all these different forces pushing and pulling, and it's tough to say for sure which way the wind's going to blow next.
And speaking of navigating uncertainty, Tesla seems to be taking a bit of a different approach. While other companies are scrambling, they're doubling down on innovation, particularly their self-driving tech. Yeah, they're really going all in on that front. And it's interesting because even with, Stellantis, they're a pretty big player, right? Recently lowering their profit projections, blaming it on China's slowdown. Tesla's stock price has been holding steady.
It's like they're living in a different universe over there at Tesla HQ.
Yeah.
So what's the deal with that? Why are investors so bullish on Tesla amidst all this chaos?
A lot of it's tied to their upcoming Robotaxi day.
Right.
It's on October 10th, and there's been this palpable buzz building around it.
Okay, for those of us who aren't glued to every Tesla announcement, what is Robotaxi Day and why should we care?
Well, it's basically all about their self-driving technology.
Yeah.
The expectation is they're going to unveil some pretty major advancements. Some folks are even saying they might showcase a fully autonomous taxi service, like the real deal.
Whoa, hold up. Self-driving taxis in China? That sounds like something straight out of a sci-fi movie.
I know, right? It's that whole disruption thing in action, and especially in a market like China, which is already so tech-forward and densely populated, the implications are huge.
Yeah, you can't deny that. But not everyone's convinced this is going to be a home run for Tesla, are they? There are always skeptics.
You're right, there are always two sides to every coin. Some analysts are saying that this Robotaxi day, it's already priced into Tesla stock. Like investors have already factored in the potential success of this technology.
So it's like they're saying, show us something we haven't already accounted for, or else.
Exactly. There's this term, sell the news, where even if the news is good, if it's not better than expected, the stock price could actually dip afterward because people were anticipating even more.
It's like Tesla's playing a high-stakes poker game, and they've got to keep upping the ante to impress the market. But let's circle back to that Stellantis profit warning for a sec. They specifically called out the Chinese EV market getting more competitive.
Right, and that's the thing, isn't it? The Chinese EV market, it's not exactly a walk in the park anymore. There are a ton of players vying for a piece of the pie.
So is that a sign that the EV party in China is winding down? Should people be hitting the brakes on any investment plans?
It's not so simple, really.
Yeah.
The Chinese EV market, yeah, it's getting more competitive, and Stellantis' warning is a reminder that not everyone's going to come out on top. But it's important to remember that overall car sales in China are down, like across the board.
Yeah.
It's not just an EV thing.
So the whole auto industry is feeling the heat, not just the electric newcomers.
Exactly.
Yeah.
But here's the thing, and I think this is super important for your listeners' sales of battery electric vehicles. They're actually still growing year over year in China.
So it's not like the bottom's falling out. It's more like maybe things are just, well, normalizing a bit.
That's a good way to put it. We might be moving away from that period of explosive, unsustainable growth and into something a little more, well, sustainable,
Yeah.
but potentially also more volatile.
Okay, so it's not all doom and gloom, but it's not a guaranteed smooth ride either. There's still a lot to play for.
Absolutely. And I think that's what makes it so exciting, honestly. You've got all these different factors at work, government stimulus, this insane competition, Tesla betting on a future with Robotaxi, you name it.
It's like we're watching a car chase, but instead of cars, it's companies, and the road is paved with batteries. So for our listeners who are trying to make sense of all this, to figure out if they should be jumping in, hitting the brakes, or just, grabbing some popcorn, what's the key takeaway here?
The thing is, there are no easy answers, right? Like, this is a market that's constantly changing. What we are seeing is this really interesting shift from that, like, hyper-growth phase into something that's maybe a bit more, well, realistic. But that also means it could be more unpredictable.
So buckle up, it's going to be a bumpy ride, but hey, isn't that part of the fun? I mean, no one wants to watch a boring car chase, right?
Exactly. It's the thrill of the unknown. But seriously, for anyone who's thinking about dipping their toes into the Chinese EV market, knowledge is power.
Couldn't agree more. Don't just follow the hype train, figure out what's actually driving it.
Exactly. Understand those underlying forces. Like, what are the government policies? What kind of technological innovations are happening? How is consumer behavior changing? If you can wrap your head around those things, you'll be in a much better position to make an informed decision.
And potentially avoid some of those potholes along the way.
Precisely. And on that note, it's time for us to hit the brakes on this deep dive.
But hey, this is a conversation that never really stops, does it? The Chinese EV market, it's going to keep on evolving, keep on surprising us. So stay curious, keep asking questions, and most importantly, keep diving deep. Until next time, folks.